Hey, and welcome to TSOB. This is a podcast for entrepreneurs who are interested in investing or starting their own funds. We are Adam Anderson and Zach Eikenberry. Join us to get a behind-the-scenes look at the relationships between founding entrepreneurs and the VCs that invest in them.
Join us for the story of the intrepid entrepreneur who journeyed into the valley, into the land of the venture capitalist, ready to harvest the bountiful bounty that the VCs promised. And yet, as the dragon cometh and smiteth down, he got no cash. Man, this is just like, this is fine. This is fine the way the capital markets are. But I'm having a hard time deciding whether or not I have been lied to about how venture capital works, or is it just that such a small percent of companies actually get money that I am just experiencing a very normal thing? Because it's not like we aren't raising the cash, it's just not happening the way we were told it was going to happen. You know what I mean?
Yeah, I think you're jumping right into the meat of the discussion, right? To say, hey, when you show up and you listen at a conference and you listen to VCs on a panel,
yep,
and they all kind of mimic one another. You know, here's what we do. Here's our fund. We've raised $100 million. We're pre-seed. We're looking for companies that do $500,000, who blah 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 blah. And you say, oh, okay, that's the rules of the game.
Yes. You told me. You just said it.
You told me the way to win.
A squared plus B squared equals where's my money?
That's right. And then you dig into it some more and you read some LinkedIn posts and you read the blogs and you listen to the podcast. And you also learn, here are the decks that people want to see. Here are the objections you need to be prepared to overcome. Here's the 20 things you got to get right to get the money. So you think you're maturing in the game. And you're like, not only do I know the rules of the game, I've studied championship teams and I understand how to build the programs that get to that top tier elite. And you say, okay, great. And then the rules of the game are thrown out, but it's like a good thrown out. So like in 2021, like all of a sudden the rules don't matter because everybody can play the game. So they said, you know what, revenue targets are squishy, you know, and we can develop a conviction in anywhere. And, you know,
we're going to bet on this team.
We're going to bet on the team. We're going to do all these. And when the rules get thrown out, what happens when the market corrects itself, or whatever we're experiencing right now with capital allocation being the leading indicator, they're the canaries, right, of the economy, and the venture, the edge of the world. All of a sudden, we realize that the rules are thrown out. That means both ways. That means the rules aren't coming back. And when they're rewritten, right, it is, hey, capital is not going to be deployed except for where there's already groupthink. So there's going to be a tremendous amount of concentration of capital into a very small segment of the economy. Like VC is not going to slow down, and it will in the aggregate. All the numbers will show because it's an aggregate number. But there's going to be 10 companies who are going to get all the love for the next year, all the attention, all the headlines, and everybody else who played by the rules, did the things, etc., are going to be left out in the lurch because, that's what happens when the rules are thrown out, is we have nothing to hold on to now. So that's what I've been processing when I talk to these folks. They're not back on VC. If you go to a VC panel today, it's about how are you managing founders so that they control cash burn. There's nothing, there's no more, here's our valuation targets, here's the deal size we're looking at, etc. VC groupthink has moved on from how do we get as many deals as possible to how do we actively manage the deals we already have.
That's right.
And so the group thinks change. There are very, very few thought leaders in capital allocation.
How many venture capitalists do you believe are qualified to have an opinion about the burn rate for a company and what it needs to do in order to hit the growth goals that the company has stated? And you might be able to tell from my tone of voice, I think that's a low percentage.
I think virtually all VCs make and are poor operators, right? Like, because the goal of a VC is to own 10% of $1 billion company, right? And take $1 million and make it $100 million, and to get the outsized return in 5 years, right? Like, that's the dream goal. That same company, the founder, after all dilution, should own 20 or 30%. So if you're really trying to make money and money's your print game, you're going to be an operator. But what VCs are trying to do is cut through and get the most amount of money for the least amount of work. And unfortunately, being an operator is work. And so, and I'm not saying one day I won't be on the LP VC side of things.
No,
right? Like it's, but I, in spreading the love and working multiple deals and trying to support founders. But I think it's kind of like it's an adage you hear all the time in education: those who do, and those who can't teach.
Yeah.
Right. Like those who build, and those who can't invest. And
Can't or won't, right? There are some
can't or won't.
Like, so all the deals that I've looked at to deploy capital into, and one of the reasons I like the roll-up model that our firm, went after, is I didn't have to have an opinion on how the companies are ran. We've only put money into companies that we believe that the operator knew more about what they were doing than we did. And thank goodness, because why in the world would I want to invest in somebody who didn't know how to grow their company? And so, but I can't armchair quarterback multiple companies if I'm making deployments into them. And so the idea of how do I, help my entrepreneur in my portfolio not burn through capital, that seems crazy to me, because it's not that the capital isn't out there. It's that how do you get access to it has changed. And now the venture capitalists you might be working with, they don't have the same triggers to deploy capital anymore. And so it kind of gets me back to the topic I wanted to go through today on my side of the house, which is the unfair truth that a pitch done well that hits all of the emotional points to make someone with capital lean in might be more important than actually having an amazingly performing company.
Yeah, I've been thinking about that as well. Can I jump ahead to, because I think your thesis is straight up, right? Like,
well, as the great theologian Paula Abdul once said, if it's straight up, now tell me, because I'm gonna love me forever, or is this simply we're going to deploy capital and have an exit after 5 years, right? This is navigating the relationships of
so I've been thinking, here's
Sorry,
nailing it today. No, I appreciate it. If you want to let the audience know that you were born and raised during the 80s, go ahead.
Hey, I was born in the 70s, matured in the 80s, and really started winning in the 90s. Go team.
I love the fact that you just said you matured.
Maturing.
So the thesis is straightforward, right? Like, it's not the fundamentals that win. It's not the operations. It's this interesting paradox where on one hand, your fundamentals and your, let's say, your revenue lines and your ability to demonstrate traction, etc., recruit a team, have headcount, have customer logos, all those things get you into the game and inform and understand that you actually have a pitch, but your pitch evolves into the thing that actually matters more than the actual company for the VC. Now, here's my thing that I've been thinking about since you and I talked about this, where I was saying, in 2023, if it's not the companies that win, but the pitch men and women, the people who pitch better win. I think there's a level in which some of the best pitch people I've heard, they not only can pitch the immediate audience, they give that audience the ability to go pitch them to an audience that's not there. And
That's a yes.
Like, how do you get your GPs at these funds to turn around and pitch their LPs and their partners in the fund? Because I think one of the fundamental flaws of VC investing, I sent you it was either a LinkedIn post or an article about this, that investor committees introduce groupthink again, where if a fund has to have an investor committee all agree, like a unanimous vote or something like that, or there's even a vote, what it's going to do is it's going to only allow the companies that are so simple and perhaps I don't know how to say this. That's why the buzzwords work, because they go bzzz right through, and the words that buzz get over to the committee, and then the champion GP says, I have to sell this to you all. So he takes a pitch deck, she takes a pitch deck, she goes to her investment committee, she pitches again without that founder in the room, gets the traction. Those GPs text some of their key LPs, try to translate this opportunity. Everybody kind of gets excited about it. And so what ends up happening is it's the companies who can play the game of telephone better get funded on their pitch, not the... So like, how do you do that? How do you do the PT Barnum, get people to talk about your circus in a way that people are like, you have to go see it for yourself, but I got to pitch this to you. And that's what I've been thinking about when it comes to like our company, because I'm so focused on getting results.
Yep.
That, all the cool little buzz around the outside of the company or the buzzwords are just not built in, because it doesn't matter to the results. I'll give you an example, the one that drives me nuts right now, and then we can talk about your thoughts on pitching, because I know you read a Steve Jobs book, or you mentioned the Steve Jobs book. The reason I bring this up is I was thinking about the phrase gamification when it comes to training. And for the past 10 years or so in education circles, people have talked about gamifying training. You need to create games, you need to have leaderboards, you need to figure out ways in which it's more engaging. Everybody knows that if you play a game, it's more engaging than just like simply passively taking in information. So quips like that are the buzzwords in ed tech, in training tech. The issue is that's false. Like scientifically, like what you do with training is you marginalize or gamification, you marginalize the people who aren't good at the game. And all you do is create cultures of, call it, what would you call it? Non-distributed ownership when you gamify something. So when you create a leaderboard, you incentivize leaders, but you disincentivize the people following and at the bottom of the So we've created hierarchies in education for years. We've tried to have 4.0s, valedictorians, salutatorians, etc. The majority of people at graduation do not care. The people at the top of the hierarchy care tremendously, care more than they should.
Yeah.
And so you've gamified high school already, and look at what that's done. And now you want to gamify corporate training through security awareness. Like, it's a dumb idea, but it's what gets funded. And it's what the people pitching gamification to a GP says, oh, this hasn't been done before. Of course, I like games. I'm at a venture capital firm. I got a 4.0 at Stanford. I'm been at the top of leaderboards. Therefore, this should make sense. And then they bring it to the GPs and they're like, oh yeah, no one's ever created an engaging game for security awareness training. Like, I see that path, right? But I'm so care about the actual results of winning online manipulation that I'm not going to deal in that BS. And I'm just like, so disheartening to like know that I could.
Well, maybe that's the right. Yes, I hear you. And I found a website earlier today called the Plain English Campaign, which is all about taking business talk. And what did they say? The tagline here is fighting for crystal clear communication since 1976. Straight up now, tell me, do you really want to communicate super clear now? Because what you just said took a long time to say and really, really hard to communicate, right? For somebody else to communicate, hey, gamification doesn't work because it blah, 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 right? And so since you're in the game of understanding psychological manipulation of the human brain, it's time to use your powers for good, because we keep, as venture seeking startups, we keep getting sad when people don't behave logically and follow our conclusions about the data that we put in front of them. And there's so many things that we make assumptions about that we expect our people that we're asking for money from to actually, make those leaps with us. That when they don't, we get very, very confused and disheartened. And I think one of the reasons it takes 70 to 100 venture pitches to finally get funding is it takes that long to get to the point where you're only saying the important things, because you want them to know gamification doesn't work and that it does this and that. And so you're going to, and I'm projecting, this is not exactly what you're going to do, but you might create an entire deck, an entire pitch about why gamification is the wrong answer in cyber awareness training. And that might be successful. And at the end of the day, that didn't cause anyone to actually want to invest. So the pitching hurdles that I have seen, and I was at a pitch competition yesterday that I walked out of. I'm sorry, I left. I was like, I can listen to more of this, or I could get chips and salsas and a beer. And so I decided that was a better answer. Because it's just
the salsa threshold.
Yeah.
Is what I'm doing more exciting than chips and salsa? And the answer is no. Then you go to chips and salsa.
Right.
Right. I like it.
Right.
It's the test.
But on top of that, it by the way, I'm having spooky door noises. That was the sound of me leaving for chips and salsa. Oh my goodness, my wife brought me coffee. How about that? That wasn't chips and salsa. Yeah, and it wasn't just chips. I got a Stella beer at a Mexican restaurant, so I got a lot of things wrong, right? But getting back to it, we say what we think that everyone wants to hear, and we try to communicate in an intelligent way. And the truth of the matter is, if you're going to sit there and see 7 pitches in an hour and a half, we ain't got no time for logic. If you need to have something that can be easily transferred down that game of telephone, has to be concise. It has to be bullet pointed, or I'm sorry, not even bullet pointed. It has to be so easy and distilled down to the core of what you are actually producing a result for. Like, for example, so I am reading this book called The Presentation Secrets of Steve Jobs, and there's a lot of good stuff in there. It's not necessarily for pitching to venture or to capital allocators, but if you want to communicate the concept of a product or service and why people should care, ooh, it's good. It's real good. The one that I liked the most was when he said it's 1,000 songs in your pocket, talking about the iPod 3, whatever. Being able to say 1,000 songs in your pocket, 1,000 songs in your pocket, and you can go all the way down the chain. People are going to be able to repeat that. Saying it's a 12 gigabit digital device that has the dimensions of 3 inches by 2 inches by 0.5 inches, that has a touch screen, and products and blah blah blah. What I've noticed when I look through my pitch decks, particularly ones that are like 12 minutes long, I do a lot of justification and explaining in my pitches about why I'm right, rather than creating the messaging that cuts through the need for me to be right. Does that make sense?
Yeah, it does, except for 1,000 songs in your pocket, like you said. A venture capitalist will go, okay, that does it. Great, thank you. I can now go pitch that. But like, if you don't share the meat, I mean, I learned this the hard way with an investor group that we had gone to the floor with, and then I get coaching from their analyst that says like, hey, you need to focus on this, 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 and this when talking to the investor group. And so I shifted my pitch. And then the feedback we got was, well, the pitch was really weak on all these areas, justifying and shoring up how their solution works, how this and this and this. So they passed on all the stuff that I pivoted away from.
Yeah.
And now, would you want to say no? Any reason will do. I get that. They probably wanted to say no, so I gave them all the reasons too. But some like the decks that I've built are kind of hard won, hard fought, right? By like learning feedback. So I pitch and then they say, hey, I have all these questions. And I'm like, ooh, if I could preempt those questions in my deck, I should. And then all of a sudden your deck gets bloat.
Yep.
Because you continue to preempt every set of questions from the next VC.
By the way, we need a t-shirt that says deck bloat.
Deck bloat.
Yeah.
But I think that's what happens after talking to 70, 80 VCs, right? Is the trick is actually streamlining your deck, not increasing it.
That's right. And the heart, who was the person that said, I'm sorry, I don't have enough time to write a short letter?
I don't know, Abraham Lincoln on his blog. So
I don't believe you, but I want to. I want to picture.
It's an old joke. It's an old joke.
It's not a joke. It's the truth, because it's so hard to create short, to the point messaging. Like,
yeah,
there's a reason I don't read white papers, because they're more than one page, right? And so, what is an entrepreneur to do if they suck at pitching? What is an entrepreneur to do if they suck at creating good communication? Because do they just not get funded? Do they not get, here's actually, I'm going to answer my own question. One of the problems with deck bloat, which I'm just going to say that 5 more times in this call. When Adam says deck bloat for the 5th time, call in immediately to win a prize. That's right.
Yeah. Our Beetlejuice prize.
That's right. The deck bloat prize. That's right. So one of the problems is that after talking to 70 VCs, they are not all created equal. one of the things I like about good messaging is it tells exactly who you are not for. And you went through an exercise of these are the kind of VCs I want to work with, right? You said someone who's on, you had all of this list, right? Our messaging should appeal to those kind of VCs and not to the other kind of VCs, because one of the things that we have in our heart is it's a limited space. I have to appeal to anyone who can write a check because there aren't that many check writers out there, is the common belief. Where the right actual answer is I need to find the correct capital allocation partner for my company. And maybe it's a VC, maybe it's a high net worth individual, a super angel, et cetera, et cetera. And so when you get that deck bloat, ding, 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 that's number 5. Oh my gosh, who's the caller? The caller comes in.
Hi, Mom.
I'm glad you stopped me because I was rolling to a place there. I did not know where it was going to go. And yeah, we edit this.
I saw you. I was like, all right, I'm going to take my Drew Carey moment here and step in and say, I don't care that the points don't matter. Ding, ding, ding.
That's it. Enough. You step away from each other. That's yeah. So anyway, Beetlejuice. So yeah, I feel like that's the secret here is, I don't know what the damn secret is, man. Sometimes it just seems heavy. Like, how in the world am I going to find the right capital allocation partner for my project?
So my point is right now that VCs themselves are in the wilderness and they're wandering through the wilderness.
Yeah.
They don't know how to price equity. All their cool little spreadsheets made by super smart analysts are no longer have the assumptions built about exit multiples, timelines to exit, up rounds, because it's exposed that most of what they do is speculation and not actually investing, because they invest now hoping some other sucker carries the bag on the markup for the next round. And when they realize that they have to bet on companies with real value and they're going to be holding equity in companies with real value, like they don't know where that real value is. Right? Like that's a tough thing to figure out. Like where, like, so then they look at somebody like us and there's two things that people will ask a company like us, and they're both really bad questions, but VCs are just lost. And so if you're putting your empathy shoes on, I'm not trying to put them down. I just think like they're functionally lost. The first question they'll ask is like, why hasn't this been done before? Like, and they'll say like, and then they'll look around, and if you're in an empty space, they get super nervous. They're like, oh, nobody's or if you're in a crowded space, they get really nervous. They don't know what kind of busy space they want to be in, but they're like, I don't want to invest on a restaurant that has nobody there. And I don't want to invest in a restaurant has everybody there. How do I find like, they just don't know where to draw that line. And the second question, and it's a dumb question again, it's a bad VC, to quote Jason Lemkin, it's a VCism, is what's preventing some big company from doing your thing?
That's
not
the dumbest
defensible
thing I ever heard.
Which is right. Yeah, but it
happens.
I've heard it maybe 3 times in the last 2 weeks. And it's because they're scrambling for a good set of questions. And they don't know, like, Zach, in your boat, what's preventing KnowBe4 from just saying that they're psychological security based? And you're out of business, right? Like, and I'm like,
no. Turns out people do that all the time. Yeah. Well, that's what I mean. It's finding that right capital allocation partner. I feel.
I don't think you're getting them in the unwashed masses right now of VCs.
No,
I think it's now the founder's role is to pick the 1, 2, or 3 VCs they want to work with, reach out, build a relationship, and do it that way. I think founders have to switch from the 2021, build a pipeline, have 20 companies, VCs in it, try to get a rat race going, find a stalking horse that will set the price valuation for everybody else, get one term sheet, then get 10, pick your partners.
Yeah, it doesn't work like that anymore.
I don't think it does. I think my hypothesis is the world has changed to this: find 2 or 3 people that the narrative works, that have enough context to be able to evaluate you, but also have enough respect for the founder to support you. And
So if you can't find those people and you're trying to start a company, are you just screwed? And what you should do is reimagine how you can do it profitable. Like, I have to be careful because I'm in the middle of a raise for a project, so I can't talk about that. But what I can say is that I got to raise 25 million to get my MVP done. So what I really need is about 35 million. And there's like no way that I can think of on how to go do that. And so the conclusion is I'm going to go pre-sell the product that I'm creating, and I'm going to sell the entire first run. And by the way, you have to be careful how you do this. There's laws involved, so don't just take this as advice. But sometimes the best capital allocator is your customer. Go sell this. You just got to go build a business, right? And we've talked about this for a while now. Sometimes when you build a business for the venture capital allocation game, you don't build the best business. You don't build a business that is sustainable outside of the capital allocator game. So is that the advice, is to switch gears from the capital allocator game to a straight up build a profitable company game? And if you can't do that, then maybe now's not the right time for the company.
I think, yeah, I do think that's a hurdle that you should consider. Because there are some businesses, perhaps like the one you're talking about, or if you're like medical device or something like that, there's a literal threshold of capital required to be able to lift to make it work.
Mm-hmm.
The creative founders and CEOs right now will find a non-capital upfront capital required part of that they can get to work on in the meantime, right? Like, starting a consulting business that does X, Y, and Z for the industry. So they build the relationships there, or they, find a way to broker an arbitrage and whatever it takes to like make some margin while they stay engaged in the industry.
Mm-hmm.
But until the capital is ready to actually deploy, or like you said, be engaged in pre-sales, purchase orders, and the like, which might allow for debt funding. And I think that's the second thing that founders have to look at. Even though the cost of capital is up, it's better to have expensive capital than no capital in some situations.
Correct.
And you should consider debt as part of your plan. And I actually think MailChimp and others, these companies who bootstrapped and built solutions and very profitable ones without outside capital, I understand the bootstrap equity trade-off. It's about speed, timing, uplift, all those things. I wouldn't be surprised if the best of the best founders stop trying to raise in the next 2 years.
Agreed.
I wouldn't be surprised if the elites say, I'm holding on to my equity and I don't need you guys. I don't need VCs who are so fickle. I don't need non-operators telling me to control cash burn.
Yeah. Or maybe we're going to have a rise of a new class of capital allocators, right?
Well, somebody will meet the new elites. Yeah. New elite founders, especially in SaaS. Yeah. There, maybe some of the top tier people are already pivoting that way. You're top tier for a reason. So the Andreessen Horowitz, Sequoias, Excels of the world, perhaps they're already seeing that movement and they understand that there's some really exceptional founders and CEOs, especially like in the AI space, certain infrastructure space. Excuse me. People who are thinking about really nuanced problems in big ways. Like I also think about like energy production, energy, if it like people who drive energy cost to zero, that might be, those are some really powerful founders and CEOs to get with who actually see that world.
What do you mean by that? Energy cost to zero.
Yeah, I think the next big wave of true technology innovation is to companies out there who will take the fluctuation cost out of energy production and drive energy. So you're talking about everything from battery to supply chain to energy.
Oh, you're talking about an industry, not a metaphor.
No,
Okay.
yeah, I'm talking about actual practitioners. And I think they'll raise a little bit of outside capital here and there, but I think the top elites will stop giving away 20% of their company just to raise $200 million.
Yeah.
Even though that gets them a unicorn and all the things, I think they're going to look back at 2023 and say, you all VCs are a bunch of cowards and you can't get your act together. And you guys are following narratives as you all get together on panels anyway, and you're an echo chamber. So I don't need you as a true founder who's doing big shit. Right?
Yep.
I might sound a little bitter and I might be overstating my case, but I think VCs are going to be surprised that the seeds they're planting now, all of a sudden, they're just going to find themselves with a bunch of me too, very boring, very blah deal flow coming out of 2023 from a bunch of like wannabe founders who actually aren't trying to do anything other than just they are the third wave of the gold rush, trying to buy land that prospectors are already bought or already combed through.
That's interesting. Here's another perspective, though. We get new entrepreneurs all the time. I might piss off this batch, but what's my reputation really worth? People who need money are going to come and work with me, as a VC. Is that as long as I hold money, I will always be able to deploy it? Or is there a real risk where I'm not going to have access to the best deal flow and the best founders because of how I behave today?
That's right. The best founders will pay attention and are paying attention right now. And even if they're 21 years old and they're looking at Mr. Wonderful saying like, shoot, even if I take his money, he's going to throw me under the bus if my little crypto exchange falls apart. I'm joking. But the best founders are watching this. And the founders who are wannabes don't care. They're always going to have their hand out. What VCs are going to realize is the only people knocking on their door in 2024 are the wannabes. The real deal founder, they'll have to get back out and start making phone calls again, getting in front of people. Because the real founders don't want to put up with this nonsense.
Yeah.
And it has nothing to do with valuations and regression to the mean and all this other stuff. Like the real founders understand what valuations are, what have you. What they're not going to put up with is non-founder friendly terms, and the BS that we got away from with doing due diligence is now back as if we're underwriting credit for founders. All that's going to, like, the real founders are going to, and I'm talking about, like I said, the top tier founders. And I don't know that I'm one. I have met with people I consider top tier founders. There doesn't seem to be a lot of delta between us, but I'm quickly thinking about pivoting my company to a place, and we are, that there needs to be a little more capital infused because we built it with this kind of inertia to actually need this extra capital. But beyond this, if I never have to raise again, like that might be a tremendous victory for us.
Yeah. And I think more and more people are going to head that direction where it's, how do I make sure I never have to raise money again? How do I make sure that I am, and that's the thing though. It's like, there's access to growth capital that doesn't have to come from selling equity. right? The trick is build a healthy company and off you go. So anyway.
Yeah, I think so. Maybe I have a chip on my shoulder this morning. I mean,
No,
I
no, I see nothing on your shoulders. You're good.
just brush my shoulders off.
Oh my gosh, there's a Chad. No, I because you're in Florida, a hanging Chad is one joke.
Oh
Am
my
I still
gosh, that
dating myself back to
yeah, no. Let's continue with the 2000 jokes. You want to do a Y2K thing next?
Well, man, you do have a chip on your shoulder. Jeez. Calm down, princess. Ah,
Just punching down. That's all I'm doing.
that's exactly what you're doing. That's exactly go to your sad little cigar bar and sit outside in the cold. I don't know where that's coming from.
Yeah,
Um,
I now as far as a larger strategy though, because I do believe that VCs are smart people. Like they're not, and they're in the game to make money. And as their returns start to level off and LPs drop out of their funds, one, because the LPs might lose net worth and can't fulfill their commitments to a fund, or they have decided to move to other asset classes. Uh, I think a lot of VCs will realize that they handled 2021 wrong. They cut corners there. And then in 2022 and 2023, they handled that wrong in that they misdiagnosed where they should correct. And so I do intend for Hook in particular to, finish a small raise now, build out what we need to build out, but start to develop relationships again with VCs over time and keep them updated, keep them apprised of the work that we're doing, so that in 2024, 2025, there'll be a few VCs who really get it and emerge as really great partners for us. And at that point in time, if we have a strategic initiative that we say, hey, it matters to have a one-time equity
Mhm.
event here to sell some equity to hit another plateau for
Yeah.
ourselves, we'll have the optionality. I don't want, like, if you ask me emotionally, I would love to never give away another piece of this company.
Yeah. Matter of
But
fact, I'm,
future Zach might need to. And I want to give future Zach more options
yeah.
in 2025.
Future Zach's kind of high maintenance. He's I've met him. I have a time machine.
Yeah.
Yeah.
Lot of fake tanning going on. You would
So
think that
much.
you would
Yeah.
think that he would just stop with the fake tans, but he is just all in.
Yeah, I tell you what, the obsession with the fake tan and dyeing all of his body hair blonde, that's it's shocking. It's
it-
shocking.
It was weird how all of us reacted to Trump's funeral. I'll just say that. That was weird.
What? Wow. Nice. All right. That's now
It was
now
a
that has to
cultural moment for
happen.
us all.
Now that has to happen, dude. That's a promise you just made that when Trump shuffles off this mortal coil, which we're not rooting for him to do so. This is non-judgment statement. Zach Eikenberry is going to do a year's worth of spray tans to an excessive level and also off-color or off-putting hair of that.
Yes. That's the commitment.
Hey, do you think that entrepreneurs should join Toastmasters, or it really gets to this point where even in this new world order we're talking about, you're still going to have to communicate to people, and it's just like, you know what, if this is part of the thing, if this is part of what you are in the world of, you're gonna need to get good at talking to people. You're gonna need to get good at communicating. And I think that future entrepreneurs and today's entrepreneurs should allocate some of their money to get better at speaking. I think that's a core skill set that they need to nurture.
Yes. I think there's a recursive, not a recursive, what's the word I'm looking for? A loop that keeps playing in on itself, that the better you get at talking and public speaking, the clearer you think. And the clearer you think, the better you can communicate and publicly speak. And you just continue to do that loop. So whatever gets you into that loop, I'm moving into a season where I'm attempting to get clarity of thought through writing, through setting up a Medium blog, to taking some of my social media presence and being clearer and clearer and figuring out what my thoughts are and communicating those out on a regular basis, so that I get clearer about my thinking so that I can move into more public speaking opportunities because I am moving to a point in my career where I get inbound requests for conference speaking and the like, and I would like to continue to have something to say and have a way to contribute to the conversation. So that's where I'm at in my journey. I don't know with all small businesses, like if just the opportunity, like Toastmasters gives you the opportunity to get in front of a room, great. You know, I have those opportunities right now, other places. And so I'm trying to figure out that link between clarity of thought and clarity of speech.
Well, we hire CPAs, we hire consultants. Toastmasters may or may not be the right answer, but where I'm beginning to think is we need to deploy some capital into learning how to do that better. I'm coughing so much today.
I get it. I get it.
I got my emotional needs met. How about you?
Yeah, I got my emotional needs met by expressing a few of my thoughts.
Yep.
I found myself wanting to hear more of your thoughts today.
I would
You
have loved
teased
to,
out some of mine.
but you literally do not stop talking. I mean, I'm a polite guy, and like the only pattern to interrupt I have is some weird joke. And so, I don't know what to tell you, dude. I mean, and actually the way my throat was feeling, half of the time that you were talking, I was over here hacking along. No, so what I'm finding today, so I'm in the middle of a raise for another project, and I keep wanting other people to do the work for me. I keep thinking, hey, you guys introduced me to somebody, and what I came to the conclusion yesterday is I just need to go do the work. I need to talk to the people and I need to do the work. I need to only talk to prospects that can write checks. Because I'm getting a lot of my time wasted by people who want to have meetings. Hey, let's go get together next week and talk about who I might know. Okay, well, I got together and you don't know anybody. And now I deferred some of my behaviors. So it's much more to the point of, okay, who's invested in things like I've done in the past? How do I connect with them? And that's the math. Anything else is not appropriate. So yeah, but that's been my conclusion is I am busy, but am I being effective? And I'm on a timeline. I want to raise money now. I don't want to raise money in Q5.
Yeah, it's delegation is tricky because there are parts that how do you say it, transactionally can be delegated, but transformatively cannot. And so like if you're the one bringing the transformation, you're the one bringing the different point of view on it, and you have the compelling narrative, like you're already playing a game of telephone. And if you add another telephone between you and the potential investor, and that investor has to go get buy-in from other people and what have you, you've diluted your message 1 degree already by delegating. And that's a tough thing to try to get through. I feel that. You're on mute, boss.
Yes, I am on mute. I did that on purpose. Sometimes I'm afraid I say things that are so wise that if people are able to hear me, I'll just like minds will literally blow up. People will be driving in their cars, their mind short circuits, and I cause an auto accident. So I do try to limit the amount of wisdom I drip on people.
Thank you for that.
Yeah.
As a member of the herd, I appreciate you helping guide us in the right way.
Yeah. Hey, no eye contact, peasant. Just when I there it is.
Eye contact's never been my problem on this podcast.
Fair. Yeah. Wonder what's more interesting over there in my brain. No, it's picking your shot and telling the story. That's the key here, is picking who you should be talking to, having a concise and easy to understand plain English story that's less than 3 minutes that will then get them engaged emotionally to have logical conversations. That's the point. That's the whole thing, is that if you lead with logic, you've lost them. You have to tie into that emotional trigger so that you have permission to have a longer conversation about the logical stuff. And that's the ticket.
Mhm.
That was a good soundbite.
It
We
was.
should probably turn that into something. All right, I'm done. Are you done?
Yes, sir. Thank you for
All right.
elaborating on some of your thoughts.
It's what I do. No, it's not. It's not really what I do. Okay. Have a happy holiday. Talk to you soon.
Awesome. See you.
Hey, and thanks for joining us for the TSOB podcast. Find us on LinkedIn and give us your hot take. The whole reason we're doing this is to get access to better conversations that help us up our game. And if you have something you want to share, we want to hear about it. Find us on the TSOB LinkedIn group and jump in with 2 feet. We can't wait to chat.